Hello, investors. Welcome to AI Insights US Stocks. I'm your chief AI analyst. This show is for educational purposes only and does not constitute investment advice. Investing involves risk. Please trade with caution. Today is December 1st, 2025, and in just a few minutes, we'll break down everything that moved the stock markets. Wall Street's five-day party just hit a major speed bump.
And wow, right out of the gate, the market took a nosedive. The Dow just plunged 427 points. I mean, that erases a pretty big chunk of last week's rally. This wasn't just some small dip. This was a loud and clear signal that investors are starting the final month of the year feeling pretty nervous. And the pain, well, it was felt pretty much across the board. As you can see here, all three major indices snapped their winning streaks. The Dow, the S&P 500, even the tech-heavy Nasdaq, all of them were in the red. This tells us it wasn't just one bad sector. This was a broad, risk-off move. It looks like investors everywhere decided to head for the exits to kick off the month. But as is so often the case, those big headline numbers just don't tell the whole story. If you dig just a little bit beneath the surface of all that red, some of the market's biggest names completely bucked the trend. And this is where the story gets really fascinating. We saw this clear split right down the middle of big tech. The so-called Magnificent Seven was basically fractured. So while giants like Apple and Nvidia were actually pushing higher, others like Alphabet and Meta, which are super reliant on ad spending, they got dragged down with the rest of the market. It was truly a tale of two very different tech worlds today. Let's just zoom in on Apple for a second. In a total sea of red, its stock didn't just tread water. It soared to a brand new all-time high. This is a classic example of what they call a flight to quality. When times get uncertain, investors tend to pour their money into companies they see as safe, reliable, fortress-like bets. And today, that was Apple. Nvidia had a very similar story of defiance. After starting the day in the red, the stock staged this powerful comeback to close up. And what was the catalyst? A perfectly timed comment from CEO Jensen Huang. He basically reframed the company's challenges in China not as a risk, but as a bonus opportunity. Believe it or not, those few words were enough to completely flip the script for investors. But of course, not everyone is so bullish on these huge tech valuations. The famed big short investor Michael Burry is now taking aim at Tesla. In a new note, he called the EV maker ridiculously overvalued. It's a pretty sharp counterpoint to all the optimism we saw around some of the other tech giants today. Now, if the tech world was divided, the cryptocurrency market was, it was united in a deep freeze. That same cautious mood we saw in stocks was magnified, and I mean dramatically magnified, in the world of digital assets. Bitcoin, which is really the bellwether for the entire crypto market, got hammered. It tumbled more than 7% in a really sharp sell-off, even dipping below that psychologically important $85,000 level for a bit. It was actually the token's worst single day since back in March. And this one day really fits into a much larger trend we've been seeing all year. Look at the performance since January. You can see this stunning role reversal. While Bitcoin is actually down for the year, the classic safe haven gold is up a massive 60%. It's a crystal clear sign that right now investors are choosing old school security over digital risk. And this crypto cooldown sent a chill right through the stock market too. Companies with heavy exposure to digital assets got hit really hard. As you can see, Strategy Inc., which is a huge corporate holder of Bitcoin, plunged 10%, while the major exchange Coinbase dropped about 5%. And just to really underscore that flight to precious metals, it wasn't just gold. Silver prices also surged, hitting a new all-time high. Get this, it's now doubled in price this year alone, which is far outpacing even gold's incredible rally. Okay, so all of this market action is happening against a very, very confusing economic backdrop. Investors are trying to get a clear read on the health of the economy, but honestly, the data is pointing in completely different directions. So to understand the gloomy side of the coin, we need to look at something called the manufacturing PMI. Now, simply put, it's just a survey of manufacturing activity. The only thing you really need to know is that any reading below 50 means that sector is shrinking. And the latest number for the US came in at just 48.2. This marks the 9th consecutive month of contraction for the American manufacturing sector. That's a clear sign of economic weakness in a really critical part of the economy. And to put that number into human terms, just listen to this pretty stark quote from one of the people who responded to the survey. To say that conditions are more trying than during the coronavirus pandemic really underscores the severity of the supply chain and cost challenges these businesses are facing. But then, just as you start to absorb all that gloomy news, you see a number like this: $14.2 billion. That's the record-breaking sales forecast for Cyber Monday, a huge indicator of consumer strength. And the details behind that number are just stunning. Sales jumped over 6% from last year, and shoppers are increasingly using those buy now, pay later services, with $1 billion in spending through that method alone. This is really the core of the economic puzzle right now. While factories are slowing down, the American consumer is still spending freely. So, how does Wall Street make sense of all of this? Well, despite today's turbulence, the market is actually looking ahead with a surprising amount of optimism. And it all comes down to one institution, the Federal Reserve. Take a look at this. This shows what the market is betting the Fed will do at its next meeting. An overwhelming 87% of traders are now pricing in an interest rate cut. It's a classic bad news is good news scenario, right? They see that weak manufacturing data as the perfect excuse for the Fed to step in. And this quote from UBS explains exactly why Wall Street is so excited about that prospect. This specific combination, an economy that's not in a full-blown recession, paired with a Fed that is actively cutting rates, is historically the absolute sweet spot for stock market performance. That optimism is leading to some incredibly bullish forecasts. RBC Capital Markets just issued one of the highest S&P 500 targets on the street, calling for the index to hit 7,750 over the next 12 months. That would be a potential upside of nearly 14% from where we are right now. Which, of course, leaves us with the big question as we head deeper into December. Was today's sell-off just a temporary storm? A brief moment of doubt before the Federal Reserve steps in and delivers that much-hoped-for year-end rally? So, the quick takeaway, the market kicked off December with a risk-off retreat, but all eyes are on the Federal Reserve to deliver a potential year-end gift. Drop your thoughts in the comments. See you in the next episode.